Prices of Bitcoin, BTC, and Ethereum, ETH, fell today as traders feared more aggressive monetary policy tightening after the U.S. Consumer Price Index, CPI, showed that inflation in the world's largest economy has reached 7.5% year-over-year, coming in well above analysts' expectations. The change in Consumer Price Index, CPI, since last month came in at 0.6%, above the 0.4% expected. Meanwhile, the so-called Core CPI, which excludes food and beverages, came in at 6% year-over-year. The rise in CPI was the largest since February 1982, while the rise in Core CPI was the largest since August the same year, the U.S. Bureau of Labor Statistics wrote. In terms of specific drivers of inflation, used car prices rose by a whopping 45%, while food prices rose 7%, the most since 1981, the Wall Street Journal reported. As of 15/15, UTC BTC was down by 3.5%, while ETH was down by 4.5% in the 45 minutes that have passed since the inflation figure was released. The price of BTC stood at $43 431, down 1% on a 24-hour basis, while ETH stood at $3 112, down 2% over the past 24 hours. The combined effects of higher food and housing prices underlines our view that a rapid cyclical acceleration in inflation is underway, Andrew Hunter, senior U.S. economist at Capital Economics, wrote in a note, cited by CNBC. He added that inflation is unlikely to abate any time soon given the currently tight labor market. This is not encouraging news for the U.S. Federal Reserve, FED, in its battle to get inflation heading back towards the 2% target, James Knightley, chief international economist at Deutsche Bank ING. Ahead of the release of today's inflation data, White House spokesperson Jen Psaki had already said that they expect the number to be high, and that a year-on-year number of above 7% would not be a surprise. Continued higher than expected inflation numbers in the U.S. are now also causing some. The same sentiment was also shared in a note by Morgan Stanley analysts, including the bank's global head of macro strategy Matthew Hornbach. An upside surprise next Thursday would mean further talks of the Fed raising rates 50 BP in March. At a minimum, calls for the Fed to hike at every meeting this year will look much less off base, the note said.